It is 7:44. The housing market, it just keeps on booming. My goodness.
You seeing signs of overheating, signs of a potential correction in the works?
This is a housing bubble.
Broadly, do you believe it's in a bubble?
Absolutely.
The mainstream media says that real estate is in a frothy bubble and that the market is about to crash. And some say it's going to be the biggest real estate crash we've ever seen, with a 40 to 50% crash. San Diego home prices have been skyrocketing with the fastest appreciation in the country. Can this type of growth be sustained, or are we on our way for a long overdue market crash? By taking a step back and looking at the data, we can get a different perspective. First, let's take a look at the housing supply and demand in San Diego. According to the Federal Reserve economic data, San Diego welcomes 26,000 new San Diegans every year, which equals about 12,000 new housing units to keep up with that demand. And we aren't even close to hitting that number. The current housing supply isn't near enough to meet today's demand. The second thing I'm looking at is mortgage rates. As it relates to how much a buyer can buy for a home, mortgage rates plays a huge role. The average 30-year mortgage rate over the last 2 decades is about 4.5%. And in California, every eighth of a point in interest rate saved equals roughly $10,000 in additional affordability for the home buyer. Assuming everything else remained the same, 4.5 being the baseline and using a 3% mortgage rate, buyers can afford about $120,000 more home just from interest savings alone. And finally, check this out. I found this to be pretty interesting. Since 2004, when the San Diego Association of Realtors started keeping track of this type of stuff, the San Diego home prices have grown at about 3.5% each year. There's certainly nothing alarming about that pace of growth. But that doesn't tell the whole story. We had to put it in some sort of context. So I compared it to the S&P 500, and over the same period of time, while San Diego home prices were growing at 3.5% annually, the S&P has been growing at 13.5% each year. 13.5%. Over the exact same period of time that homes in San Diego have been going up at 3.58%. So, do I think real estate is in a bubble in San Diego? When I look at the data, I arrive at a much different conclusion. This is not a bubble. This is not even scary. Higher prices should be expected. And in fact, with inventory likely to remain low for a long time, we should expect to see a lot more increases in the price of housing here in San Diego.